up, brother?
Oh man, good morning.
Good morning. You getting your morning dose of mortgage news, huh?
That's right. Hump day.
Hump day. How goes the week so far in the mortgage world?
It's crazy. A lot of big news. A lot of big news.
That's
We got
true.
some hot topics here to bring up and talk about.
You know, I
Um,
think yeah, I mean,
I think a lot of people know about it.
yeah, it's been all over. I know our feeds and whatnot talking about rate cuts, which is something that would be nice to see after the year we've had, huh?
Yeah, year to almost two. Getting
That's true.
getting beaten up from those historic lows.
That is true. Uh, I think the thing to really I just jump into it. There's been all this talk about the Fed's cutting rates. Um, I found a cool article. I'll throw it up here real quick from CNBC. I don't know. What do you think? Do you think five rate cuts next year is something we're gonna see?
I'm happy to see one starting to go the opposite direction now. Finally, five. I think I don't know. I don't know if it's a good thing, scary thing. Do they raise them too much too quickly to combat this
I think
inflation? What does
I,
that do? I don't know.
I think that's the question, right? Did they raise it too quickly, too much, to try to cool things off? I mean, it's I don't know. Clearly, obviously, the talking heads out there think that someone did something wrong. I love this quote down here. Again, these guys who manage this money day in day out a lot smarter than I am. But this quote down here saying that I think the Fed policy is now so disconnected from economic factors and from reality that you can't make any assumptions when the Fed is going to wake up and start smelling the amount of damage they've actually caused the economy. And that's some bold words right there, talking
Yeah,
about what those Fed rate hikes have done. It's I don't know. Obviously, a lot of change. A lot of worry about inflation, a lot of worry about recession talk and whatnot. I don't know.
yeah, it's crazy. And I mean, there's another thing too. With these rates starting to come down, enticing people that kind of been on the fence for a while, rate conscious. It's going to drive the demand up again, and then the whole housing values are going to go up, and it's going to be crazy.
Yeah,
2024.
yeah, it's true. So as we were talking about that, right? There was a stat that was thrown out, and one of the guys we follow, shout out to Habib and the MBS Highway there, but he put together this chart saying, odds of when the Feds might cut the rates at their upcoming meetings. So these are all their upcoming meetings over basically the next year, and the odds that he has predicting if they'll cut the rate during that meeting. And obviously, the meeting that we have here next week, they don't anticipate any kind of rate cuts. But once that purchase season hits there in spring, it's man, it's looking pretty crazy that we might see some rate cuts that are going to be um, good, I guess. And if you look at that, the percentage going forward, time and time again, I mean, what do you think, Pat? Are we going to see that many rate cuts over next year, or is he over predicting? What do you think?
I don't know. I think it might be an over prediction a little bit, but I mean, five. That means they're really backtracking quickly, and who knows what that means
Oh,
for rates and where we're gonna, land eventually. Um, but hopefully they don't lower it too quickly, where we gotta,
right.
raise it again because inflation's not fully done or whatever.
Well, what does it do
Um,
for the affordability, right? Like, I mean, that's
no,
you drop those rates a little, too quickly, all of a sudden the housing prices are gonna just jump again, and then what, right? So,
I mean, that's exactly it. Like you said, I don't know if you go back to the last graph, but right was in May, right at the peak of historical purchase season. So when if I was a betting man, which I am, I would bet on that right there. May 1, 70% that they would have raised or lowered the rates by then.
absolutely,
Um,
and I mean that's I think it's something to think about, right? That cost of waiting, like if there's a house, if you're even thinking about jumping into the housing game next year, there's why wait, right? Like, I mean,
yeah,
that's
do
just
not
gonna
hesitate.
open
Do
some
not hesitate.
little.
We have programs out there that will, lower that first year's payment. a 1-0 buy down or something like that. We can get you in some temporary, then get you into some permanent financing once these rates come back down and stabilize somewhere, right?
Yeah, and I mean, they're definitely going to come down, and I think that that's the crux of it, right? Is was what like when they come down, and then how is that going to affect how much that house is going to cost you?
Yeah.
I mean, I know you and I have both seen it being natives here in Colorado, like that housing, crunch and how much money you can make off appreciation. I, don't know, I threw this together. This was something I used for a client a little while back, with kind of that appreciation of property, right? And I was trying to explain to them the cost of waiting for the next, they're like, "Yeah, we're going to wait until the rates drop down," and so I kind of put together for them what it looks like, waiting 6 months, waiting a year, waiting in a couple years. I mean, yeah, it doesn't seem like a ton, $28,000, and if you wait 6 months, and that was based off some math I can show in a second. But I think the big thing here is those charts of that appreciation, and it's just going to go to the moon. That house you're looking at right now that was like 570. Give that a couple of years, it's going to grow, $100,000, no problem in a couple of years, and that's without some crazy rate drops, right? So
Right. I mean, we can speak to it. We'll speak for Colorado here because that's where we're from. We're local. What we represent. Since the housing crash in 2008, I mean, what are property values done since then?
since '08, I mean,
Doubled.
100, yeah, at least 100% up, yeah, at least. In some areas, probably higher. I mean, it's
Is that your typical,
yeah,
3-4%
no. I
that
mean, I
you see?
definitely
But
think we're going to get back to, I think we're going to see a more historical gain over the next few years, right? But are we going to see? I mean, are we going to see 22% again next year? Probably not, right? But man, it's starting to compound some big numbers, right?
yeah, I mean, affordability. It's all the way around it. I don't think
All
people
around it,
make
yeah.
enough money to buy these houses nowadays.
That's true. That's true. I don't know. So, what do you think, Pat? What's some good advice you'd give maybe a first-time buyer who's looking to jump in the market right now? What is your thoughts? What would you give them if you could give them any advice right now? What would it be to when it comes to getting into the market, as far as where rates we think are going, where prices we think are going? What's the advice you're giving them?
I'm telling them to give us a call as soon as possible,
Yeah,
to discuss these next steps. And yeah, obviously, I fully feel that anytime's a good time to purchase, whether the market's up or down. It's just all about getting the right deal done. And I'm going to have it on my tombstone, but marry the house, date the mortgage. Let's let's figure out your best financial position. If we got to change it along the way, we'll do that. So yeah, definitely, it's call to get started because it is a scary process being a first time home buyer. We've both been there. Um,
sure.
and we didn't have the knowledge that we have now, obviously. But
Very true.
yeah, no, I think it's a good time. I think it's a good change coming. Obviously, people that overextended themselves these past few years could really capitalize with the lower interest rates. Maybe doing debt consolidation with some HELOCs. But no, I think it's a crazy time. I think 2024 is going to be something crazy.
It's gonna be something crazy. Well, man, I know you've got a ton to get on today here, hump day, trying to get a couple things done for some clients
Yeah,
still yet this afternoon. It was good chatting. I definitely say, hey, if you have any questions, send us an email, bros@longspeaklending.com. Obviously, call us 303-888-8884, or send us, look us up on the socials at Longspeak Lending. Um, Pat, hope you have a good rest of your day. I hope all you're
you
watching
too.
have a great rest of your day. And I guess we'll know sooner than later if we're right on those rate predictions, huh?
Yeah, we'll see. We'll see.
Right
You guys
on.
have a good one. We'll see you
You
soon.
too. See ya.
Peace.
Out.